Hi everyone, let's go over my bullish and bearish Elliott Wave cycle count on the monthly Bitcoin chart, starting with the bearish scenario where we are looking for a finished 5-wave impulsive structure to the upside in a wave 1, followed now by a multi-year bear market in a wave 2 for then continuation to the upside in a bigger wave 3. In this scenario, wave 2 retraced to the 0.236, which is a very rare target for a wave 2, but it is not impossible, it is a target nonetheless. Most recent example is when price bounced at around 24k in June-July and went back to 31k for the second time. In that impulsive structure, wave 2 also retraced to the 0.236 before then a move to the upside in a wave 3. So it's not impossible, it's just a lot less common. In this particular scenario, wave 3 over here is shorter than wave 1. Of course, we're on the logarithmic chart using logarithmic measurements, and wave 3 is not allowed to be the shortest wave between 1, 3 and 5 in an impulsive structure. However, wave 5 over here is shorter than wave 3, so that is all good. If we then look at wave 4 retraced to the 0.382 taken from the low of 2 to the high of 3, which is a common target for a wave 4, and wave 5 retraced or went to the 1.618 taken from the high of 3 to the low of 4, which is a common target for a wave 5, creating the all-time high, the end of wave 1, now looking for this multi-year bear market to the downside. Now, most commonly, a wave 2 retraces to the 0.5 to the 0.786, which is between $400 and $20. Less common target is the 0.382, sitting at 1300, and a rare target is the 0.236 as well as the 886. The 886 is completely irrelevant, so the 0.236 is sitting at 6.1k. Now, if we are looking for a multi-year bear market, then the 0.236, or at least the area around the 0.236, is going to be my area of interest. I don't really think I want to see this low being taken over here at about 3k, so creating another higher low on price, which is also what price tends to do in any big markets, multi-year cycles, where you create over here higher low, eventually a higher high and a higher low, higher high, higher low, higher high, higher low, and just continuing repeating that process. So looking for another higher low to be made before then continuation to the upside for then another eventually bear market higher low. In this particular scenario, we have a very big support between 8 and 12k, so that is definitely an area of interest, but the 0.236 sitting at about 6k. You also see two vertical lines on the chart. These are fib times taken from the low to the all-time high. Most commonly, a corrective structure, in this case a wave 2, is correcting at least till after the 0.382 fib time, which is sitting in September 2025. However, just because of time, I also put the 0.236 on the chart, because on such a high time frame, just like the 0.236 has been hit over here, it is still an interesting Fibonacci level, and the 0.236 is sitting at April 24th, so that is next year. Now, in this particular scenario, again, most commonly a wave retraces to after the 382, but the 0.382, it will be interesting to see where price is at that moment in time. If we then go to the bullish scenario, then we are looking at a buildup of multiple 1-2s. Wave 1 in red, wave 2, then another 1-2, another 1-2. In this particular scenario, each wave 1 is shorter than the previous wave 1, which is what you like to see. And also each wave 2 over here is around the same time than the previous wave 2, which is fine as well. In this particular scenario, we could then be looking for another wave 1 to the upside, for then another wave 2, creating again that cycle structure. Higher lows, higher highs, higher lows, higher highs. Now, if I then also put this on my chart, then what you can see is that this second wave 1 over here went to the 0.786, taken from the low to the high of 1 to the low of wave 2, meaning that this structure to the upside is about 78% in length compared to this wave 1. So it's a shorter second wave 1. But what is interesting is what we then see with the green count. So here you can see that the green wave 1 was 0.618, the length of this yellow wave 1. Trend-based fib extension over here, the green one taken from the low to the high of the yellow one to the low of the yellow 2. So you can see that this move to the upside is a little bit shorter. This move to the upside is again a little bit shorter. At the same time, you can see that the retracements are becoming a little bit deeper. Over here we hit the 0.236, here we hit the 382, here we almost hit the 0.5. So with this in mind, we can estimate that price can move to the upside, but potentially reach around the 618, 786, 618 area, or maybe even a little bit lower, and that if price is going to make another bear market low, that it reaches the 0.5 once more, or maybe even deeper, the 618 for example. But in this scenario, I put as a target for a potential next wave 1 in blue these 618 and 786 targets based on what we see over here. Of course, keeping in mind that each move might be less high. The 618 here is at least sitting at about 100k, and the 786 is sitting at about 177k per Bitcoin. What is also interesting is to compare the beginning of this move to the upside to the previous impulsive structures that we had to the upside, just to see if we could potentially already be in a bear or in a bull market and the low is in. Now, this structure over here is from this move in 2018-19, where eventually we also had the COVID low. If I put this bars pattern on top of where price is now, you can see we are not too far away from how price action reacted at the lows over here. We move up sideways for a bit. We even still have a couple of months left to go sideways. Before then, we are looking for a bigger move to the upside. So that's actually pretty okay time-wise. If we then compare it to this move over here to the upside in 2015-16, then I put the bars pattern over here. You can see that also compared to this piece of the chart, we are actually doing quite well considering everything. Of course, we've been ranging for a long time, but if you compare it to the bars pattern, which is the bit of previous price action that I copied, we are actually pretty much at the same price as we were over here. And here, of course, we continue then eventually pushing to the upside. Another thing that is interesting is that usually the wave ones of then a new bull cycle do not take the high of the previous wave one. Over here we have a 1-2, which clearly didn't take the high, but also over here the high, and then you have a 1-2, and then in wave 3, that is the moment you're actually going to take the previous bull market high. So this is something we have to keep in mind as well. Now, if we then compare the wave 2s in time, then you can see that this yellow wave 2 compared to the red wave 2 is a little bit shorter in time, which is good because it's a lower degree wave 2, so that's also like what you want to see. And the green wave 2 over here is exactly the same length in time as the yellow wave 2, so that is also very nice and fits very nicely for the bullish scenario, where you don't want this green wave 2 to be much longer in time compared to the higher degree wave 2. So the fact that wave 2 over here is exactly the same time from the high of 1 to the low of green 2 is exactly the 1-to-1 Fibonacci time of the yellow 1 to the yellow 2, gives trust that in the bullish scenario the low is in and we are looking for upside. We are looking for new all-time highs in this scenario. The moment price dips to the downside, it becomes incredibly unlikely that a 1-to-1-to-1-2 is correct, and then the bearish scenario gets a much higher probability. If we compare the impulsive structures in time, then you can see that this impulsive structure to the upside was longer in time. It was about 1.382 longer in time, taken from the low to the high of 1 to the low of 2 with the Fib time tool. So this wave 1 is shorter in price, but a little bit longer in time. But what is then nice is that if you compare the yellow wave 1 to the upside to the green wave 1, it's again exactly the 1-to-1. So these moves are identical structures to the upside based on time. It's just that this green wave 1 did not reach the 0.786, but it reached the 618. So it's shorter in price, but it is the same time as the yellow one to the upside. So now what we can then do is we can compare a couple of things and get an estimation of the target more accurately based on time and price. So of course I already spoke about the 0.618 and the 786. These are taken from the targets where price retraced before. Each wave is a little bit shorter reaching first the 786, 618. So that is why I got both of these on the chart. But you could argue that maybe I should have put the 0.5 in, but just because of these being hit, I'm looking at these at the moment between like 100k as mentioned and 180k. But time-wise, if we compare time with this move over here being a bit longer than the first wave one, but the green wave one is around the same time as the yellow wave one. So if the blue wave one is going to be around the same time as the green and the yellow wave one, we are looking for an all-time high to be made in October 25. If, however, this blue wave one is going to be shorter in time compared to the yellow and the green wave one, then the next area of interest is around March 25 and then eventually the 618 at September 24th. Well, so basically this area over here, price and time-wise, is very interesting between September 24, October 25, between 100k and 180k. If we then finally look at the probabilities of these cycle scenarios, then currently the highest probability is the bullish scenario. If you look at time, if you look at price, as long as this low is holding, there is no reason to think about the bearish scenario. 15.4k is very, very important. As long as this holds, the bullish scenario has a higher probability at the moment. If price would go below 15.4k, then the more bearish scenario comes into play and we are looking for much lower prices. And of course, in my daily update videos, we talk about what is happening more locally to then give probabilities to the scenarios over here for either another move down or continuation to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.